All right, it's your man, August Zemeka, Mr. ABBA FOREX, CEO ABBA FOREX. Good morning, good afternoon, good evening from wherever you are. This for this particular entry method in this strategy, this my premium strategy. This entry method is you should use it mostly on 15 minutes time frame. It works the same on every time frame. It works the same in 1 hour time frame, in 30 minutes time frame, in 15 minutes time frame, in 5 minutes time frame, even in 1 minute time frame, even in daily time frame and weekly time frame. It works the same. But I use it in 15 minutes time frame. You can maybe um, maybe get more acquainted to it, develop it more to use it to create more and make more out of it. But me for now, I only use it on 15 minutes time frame. So this is how it works. When you see this right on screen, give me a moment. This here. When you see something like this, you see this is these black ones, these black things here are the MACD, which these are the MACD, the black sticks, which are the MACDs. These black sticks are the MACDs, which and then when you see the MACD coming up above around this overbought area, and then that the check there is that when you see it close. Now I see this one here closed above the 90 level. You close above 90 level. When you see the candlestick like that, a stick, not candlestick, the MACD stick close above the 90 level, it's a place for you to enter a sell setup, a sell position. When you see close like that above the 90 level, and then secondly, then you now see a crossover in the stochastic. You understand what I mean by stochastic? You see a stochastic crossover, combining plus the over this overbought your MACD candlesticks in overbought. I usually use the first two that is in the overbought. Anyone that closes slightly above the the level 90, sorry, that's a sell setup for me. For a buy setup, the same thing occurs down here. See this candle, this very candle here, this very sorry, not candle, this very MACD stick there. You see the same thing occurred there. The same thing occurred there with a stochastic crossover. It's a stochastic crossover, and then this candlestick now appeared. Now it now closed below the level 10, which is the over areas. Over level 90. Level 90 is a overbought. Level 10 is oversold. So whenever the MACD stick closes, I didn't say open, when it closes above the any of those overs area, when it closes at level 10, it's a buy setup. When it closes at level 90, it's a sell setup. You understand? We're confirming it with a stochastic crossover. How do you know when this candle closes? When this candle closes when there is when the next one opens. This one now can only close like that when the next stick opens, and the next sticks, it opens according to the candles. Each of the sticks open according to the candles. So when it opens like that, when it closes like that, and when the first stick closes like that, when the new one opens and this one is still above, at that level 90, above level 90, that's where you should enter a sell position. Let's go to this thing. Let me explain more there. You can use you can do work it, or you can use it on whether MT4, MT5, it works the same. Like here you see these candlesticks. Now this particular place, this particular candle, it comes with a candle. These magnetic sticks aligned with candles, each candles. So when this one opened, this we can only be sure when the next candle opens. Immediately it opens if the previous magnetic sticks still remain above that above level 90 or below level 10. That's when you know that the market is about to reverse, to go for you. The same thing happened here. Same thing happened. The same thing happened here. You see it, and plus with a stochastic crossover. Same thing happened here with a stochastic crossover. Going forward, you will be seeing the same thing. It happens everywhere. It happened continuously. Let's backdate a little bit. Back test. It happened here with the stochastic crossover, and you see it happening here again with the stochastic crossover. See it happening here with a stochastic crossover. Don't make sure that you see a stochastic crossover before using this before entry. Once the magnetic candlesticks closes below the oversold, look out for a stochastic crossover. See a stochastic crossover and then place your trade, enter a buy trade. Mostly when it closes here and you see a stochastic crossover, and when you place an entry like this, when you place your stop loss should be below the previous candle. You place your stop loss below the previous candle, mostly, especially when you see this fractal arrow, this fractal arrow, where you see, that's where you place your stop loss below it, below the previous candle, below the wick of the previous candle, and below, if there's a fractal, place it below the fractal, the pointing arrow. So it happens continuously everywhere, as in it continuously happens. You can always see it here. You enter your trade, and when the first candle, always take your profits in the first two candles. Let's say you open more than one position, you open the two positions. When you're entering a trade, when you open a trade, open at least two positions. So when your first candle close in profit, you take out first candle and put your stop loss from, you understand what I told you in the previous videos. Move your stop loss from below, from where it was, to break even or a little bit above your entry point, locking in some profit, so that in case the market reverses, it won't stop you out in any negative. You still stop you out in low profit. So that is that for that. So please be mindful of how you trade this. Try it out on demo. Watch your accounts. Watch your trades. Don't place a trade and then just go out like that. Watch your trade. When you play a trade, watch your trade. Once your trade is in profit, first candle close in profit, learn to always move your stop loss and then lock in some profit. And move your stop loss. Just at least, even if it's 2 or 3 pips, you lock in 3 pips in the profit area. If it is a buy position, move your stop loss above, a little bit above your entry point. Even if it's 2, 3, 4, 5 pips, you lock it in there and allow the market to do its thing. If it's a sell position, move your stop loss below the entry position, a little bit below the entry position. Even if it's 2, 3, 4, 5 pips, lock it in there, and then allow the market to do its thing, to just move further. Because most times the market might come back to retest the previous level before it now continues down. Sometimes the market might come back to retest and then break it and go up a little bit before coming back down. With me, I don't take chances. I don't want to take chances of those reversal breaking up to go and come back and down and go some other place. I just first 2 candles or first 3 candles, I close, I take my profit, and I wait for the next setup, because it's 15 minutes time frame. This setup occurs severally. You understand? It occurs severally on several instruments. So that is how I traded this particular entry method. This works. It works on volatility. It works on the on currency, on currencies. It works on currencies. It works on all the currencies. In short, it works there. Mostly Canadian pairs, CAD pairs, and USD pairs, and I think QE pairs, New Zealand, NZD pairs. So just try it on your demo and see how it is, and I would let me know what you think, and then from there we can see where we can throw more light for perfection. All right, I just choose to use MT5. Not that it doesn't work in MT5, work on MT5 as well. Just choose to use MT5 to for clarification. All right, so let's be guided at as such, so we don't make mistakes. All right. Thank you so much. I appreciate.